and we'll kick this thing off. Awesome. All right, cool. All right, well, good morning, everybody. It is April 18th, and today's a little bit some special. All of you that are new here joining us for the open house for the next 3 days, I'd like to say welcome. Thanks for hanging out with us. And it is my humble opinion that this may be the last place you ever have to join. Me personally, I I have been all over the spectrum of different rooms when I was learning the trade many years ago. And before being on this side of the mic, I was also a simpler member for a while. And it's the last place I ever was. And here I am now. So if it helped me, trust me, I really think it'll help you and you can find it to call it a home. But let's go ahead and see what we're going to do about today. Awesome. Let's see, make sure I'm heard over here. Awesome. What's going on? Andrew, what's on? Taylor, Mirza, Tom, Mike. What's going on, Mike? Michael, Mike Williams, John G. Cool. Welcome, everybody. 5x5, Gerald. Awesome. All right. So, for those of you that do not know who I am, my name is Kody Ashmore. I'm Director of Weekly Options Strategies. And my little type of trading, if you will, is I'm very much more of a I'd rather come in, make my money, and be done for the day, right? Like whatever it may be. If you're unaware, like most people don't think about this, is like so. I always tell a lot of the traders like if you can't make $100 a day, don't expect to make more than that. And also, if so like if you could only make 200, like $200 a day doesn't sound super like sexy, right? Everyone's like, ugh, 200 bucks. But if you do that consecutively and consistently, that's about 50 grand a year. And that is that is more than we'll say majority people, depending where you're at in the US and what you're doing, salary, right? That's a pretty good little extra bonus as well. So for me, what I do a lot of is I've been doing a lot of basically everything just on SPX. You could also do it on the SPY if you want to manage risk a little bit smaller. And if you have the PDT rule, you could also do it on ES futures options. It's all the same. Now from there, I just look to place a high probability trade. Uh, Actually, I would say a high probability setup, and I place a high probability options trade around that, and I look to go ahead and get my money and be done with it for the day. So that's kind of my thoughts there. And let's see how it looked to play today. All right, so as far as ES goes, we did get that breakout to the upside. Can't say I was expecting that little rally at the end of the day, strike right at 1 p.m. and boom, off it went. All right, but let's use our support and or resistance levels, however you deem it there. Let me go ahead and get my pin so you can see what I'm drawing at. All right, cool. Gotta double check something in the background real quick. Yeah, okay, I see the note. Thanks, Amelia. All right, cool. So I think I'm doing what you want me to do. If not, let me know. Um, but let's continue on here. We're all here to do some trades. All right, so pin check. All right, so we're obviously starting to push up. If you're unaware of how to find support and resistance, just look to the left. Really, we're coming into this zone. It was respected here, going across the left, and you see how it was just an area where we've been hit. Me personally, I've been actually looking for a pullback to happen in this area, but it doesn't look like it's going to happen. It looks like we do want to come up and linger near 4,200 on the ES. So if that's the case, and we have a thesis of price potentially wanting to go, we say sideways to up, um, we just look for our entry and look to go ahead and place that trade. So what I'm looking for today to unfold is if we're rallying up here to 4,200 and the market does wish to continue pushing to the upside, I want to pull up my little intraday squeeze chart right here. And all this is squeezes noted from the 1 hour, 30 minutes, and all the way down to 15 minutes. And ultimately, all the squeezes look like they have finally burnt out, but we could push it a little bit further. Imagine the 4 hours looking, we're in a 4 hour squeeze up here at the second ATR there. And we could go on down to the 2 hour real quick. All right, 2 hour squeeze is firing. But we can note that we're up here at the third ATR, pretty much most of the intermediate time frames. So waiting for a little bit of pullback for the bullish momentum to continue would make sense. Now I want to pull up my little quick hits chart. I use this a lot to basically hit my entries, right? So if you haven't seen my, we'll say my plan of attacks, if you will, that I used to put up on YouTube, and basically if the bullish momentum wishes to continue, which we can't deny, that clearly is happening at the moment, and as things have gone higher, waiting for that pullback, I would like a little bit more of a deeper pullback to the VWAP area, and then I'm probably going to look to put on a 0 days expiration, we'll say slightly bullish skewed iron condor. So think of it as like a drama free day trade, call it 2.0 type of thing. And the reason I've been doing the condors is because it hedges out some of the movement that you would experience in a drama free day trade. So basically, what I'm been looking for today is I'm going to look for this price movement as we have rallied up. I am going to look for a pullback basically to the 30-minute 21 EMA and VWAP and look for a little bit of a rotation there and look to skew it to the upside. And it also, so we have 2 minutes till they open. I do want to take note of what the expected move is at the open. I've been tracking those. So I get rid of these. Good morning, Jill. All right. So see, go to today's date, and right here, I want to look to see what this number says at the open. I want to take it, add and subtract it to where we open up at, because what this does, it tells you the expected move for the day. I've been tracking this the last few weeks on um, on the SPX, and what I've noticed a lot of times is we'll come right down to a little bit of the expected move, and again rally right back into the middle. A good example would be not yesterday, but the day before. Right here, we rallied right down to the expected move. We hovered down here and then ripped right back up near the open. So that would have been a perfect like pinning trade if we put one on right at the open. But for me, what I'm looking for is I want to price out those expected moves, look to get a little bit of a directional bias, and then I will place a high, we're going to call it high probability based off of how I'll be out of the money deltas. Iron Condor looking for it to continue, and then the target would be about 50% of the um, credit received. All right, so opening up really high, as would be expected. Let's go ahead and get that expected move. See if it bounces around for a minute. I personally just hop into the trade conquest, and the reason being is because I'm not looking to grab a whole bunch of. Well, obviously, the more credit, the better. But it's more of I'm looking to hedge out some of the movements that can occur, and I'll explain what I mean here in a moment. So right now, the expected move is we'll just call it 19. So I'm gonna take 19. I'm going to add it to what we're currently opening at. So we'll go 41.65. And all you do is we'll add 19 to it. That puts us up at 41.84. So all I do is go here, right click, edit. So that's all the way up here outside of the third ATR. And then for the downside, all you simply do is subtract that 19. That puts us at 41.46. So that kind of, in a sense, gives us our left and right lateral limits as far as what is being priced in, right? Not to say we can't bust right through those, which we absolutely can. Okay. And I'll wait for my quant pivots to load up and we can get that going as well. I decrease this a little bit. Bam. Okay. At this point, would I suggest continuing holding the IC from yesterday? No. So the theory, if so, yesterday the theory was, or like considering the setup, right? Yesterday's Iron Condor, we were expecting the squeezes to continue lower, and then when that, when this occurred, this complete just and then rip up, that's kind of changed the process there. Now all the squeezes have pretty much long shot to the upside. See, but we say if we do pull back, if you're still in it, it may pull back. Um, I mean, we'll obviously have to wait and see. All right, I want to pull up my ES. There we go. We're testing VWAP. I'm gonna see what happens here, which is this green line here. So in a nutshell, if price does wish to continue higher, I'm glad we're testing it already because this is the area I would like to see hold. And if it does, then we'll skew up that iron condor for the day. I'm actually going to move this over here real fast. All right, so what I want to bring to your attention now, as ES is testing the, as ES is testing VWAP, and if we do wish to put on a bullish structured trade. So right here, if you have never seen quant pivots before, this right here is called L1. And L1, if you come, this is for the day. It touches L1 maybe 20. Oh, sorry, touches it 36. We'll call it 37% of the time, and it closes below it 21% of the time. All right. But if we have a bullish thesis that price wants to go higher, and we theoretically stay above it at least 80% of the time, so then therefore down below this area is where we want to have our short strike, and then where we would want to have our upper strike would potentially be up there. And you see that puts us right below the expected move. So that actually might not work quite a bit unless we get a more deeper pullback. The reason being is because that's going to actually put us quite a bit. The premium will be pretty low, so we might have to wait a second on that one. Simply being because we're so far up there, and we're still just testing VWAP. Let's see. So actually, if this is down here, 41.37, let's just take a look to see what that's looking like over here. On the puts, 41.37. See a delta 10-ish. Okay. I can deal with the delta 10-ish. Zoom in here. These gap up days can make it a little bit tricky. Boom. All right. So from here, that's what I'm watching. We're coming down. We're testing VWAP. We're oscillating here. This is what I want to see if we are indeed going to hold. And right here, if we move over to the 1 minute chart, we can see how price is oscillating here. Right. So what I'm going to look for at this point is most of all of the quick hits um, labels are pretty much above zero except for one. Now they're almost the rest. So that means we won't get any arrows to the upside if that's what we're looking for to happen. So that's something to take note of. We will only get a few circles, a few dots, if you will. And that's because they're all above zero. And if you've seen quick hits before, mine is slightly different than everybody else's. I do have 821 versus the 310. So that may be um, that may potentially why yours may be slightly different than mine. So we're holding. See what happens here. Does I knew that question was going to come, John G. Does the gap normally fill? Sometimes the gaps don't always get filled. I'm looking this as in terms, and the reason why I'm okay with not waiting for the gap fill is because the way my mind works is who's in charge, buyers or sellers. Since last night open, this VWAP has the volume weighted average price of all buyers and sellers since the market opened last night. And as of right now, buyers are in control. Now the question is this where buyers are going to stay in control? And if they do stay in control, then that is where we want to place the trade to at least go sideways to up. That's the way I'm looking to skew it. Yeah, you are welcome. But yes, sometimes, obviously, yes, sometimes gaps are filled. But the way I analyze markets is based on a um, who's in control, buyers and sellers, and we also give it a little bit of a wiggle room as well because we are up quite a bit. We look at the internals, something we haven't done yet since starting this session. All right, ES is all right. So it looks like we're going to start pulling back some. The ticks are still pretty strong. We'll see what happens here. Advanced decline sitting at 640. We'll see what happens here if we do start to move around. And the VIX, can't say I've seen the, didn't think I'd see the VIX this low in a long time, but things are looking pretty good right now. Yes, Luke. Okay, so yes, in the Iron Condor is from the drama free class, yes, but that was whenever I was skewing it a certain direction. But whenever you can hedge this out a little bit, and I'll explain the difference here and how you can make it work. But yes, in the beginning, I didn't like the ICs because I wanted to get directional and get it completely. How can I say it? I wanted to get the direction right and get in and get out, but that was when it was really wide. This one, in this particular method, you can actually make it 10 wide, and so a big move against you is actually, we'll say, contained. But yes, I did say that in the drama free class because it got me, as you say. All right, so price is still on here. This slightly greenish bar is a high of low bar. We come down to VWAP, we're starting to hold. Let's go ahead and look to see how we could price this out here. All right, so wishes think about 41.35. Let me see what that is looking at like right now. 41.35, still delta 10. See if I'll make it 10 wide and we'll just see what's going on here. So that's only one end right there. Now let's go to the upside. Might have to drag that up a little bit simply because that is pretty far out there. Now, if we wanted to structure it to the upside, we see up here at H2 is outside of the third ATR. It is outside the expected move to the upside, 41.90. We look for here. And so H1 will only close above this one about 25% of the time. But I'm gonna go ahead and just price this out a little bit outside of here as well. We'll go 41.95. And we may just have to adjust the strike sum. I said that's all the way up here. So we'll adjust the bottom side. Yeah, because that for 90 cents ain't really going to work for me. So I'm going to probably go to a delta 20-ish, 41.45. So 41.45 puts us right below the expected move. But what if we put it 41.40? Just playing the numbers right now. So we get about $1.15. And this is what it would look like on a risk graph. And and the market's looking pretty strong. So let's just crank it up a little bit more. All right, so get about $1.40 for it. All right, so I'm liking that right in that area. So why this setup here? So for one position, you get 140 bucks, and then if price say it just blasts all the way up to our, we'll say break even is up here at 41.96, which is all the way right here outside of the hourly third ATR, um, near or outside of H1, which will close above roughly 25% of the time. Now the lower break even point is is right at the 5 EMA. I might crank it up a little bit, anticipating that maybe the gap isn't filled. Nah, I'll keep it at 45. I like that idea. Okay, so let's talk about this for a minute as well. So I want to go ahead and try getting in for $1.40. And this, all I'm going to look to do is collect 50% of the credit as price oscillates between here, saying we don't completely skyrocket and blast out the highs relatively soon. And then we also just don't completely smash below doing a gap fill. All right, wait a minute here. We might actually get a better fill. You gonna take the 41.45? Okay, right on. And let's see, look, so more to do with general market structure. Yes. Okay, so I'm gonna get this structured out in here. All right, so 41.95, then 42.05, just 10 wide. Then we got 41.45. And how far outside the expected move did it kind of put us? I'll put us right at the expected move. I got my calls there, and then on the put side, 41.45, 41.35. Oh yeah, always take the questions. All right, so let's go ahead and confirm before going on and hopping in this thing as we're stalling up here. And if we do decide, if it does go down to a gap fill, which is down at 41.50, so if you're want to know what your loss would be for one position, if it comes down to 41.50, your loss would be 140, 150. So you're at close to a 1-to-1. Me, as I've been playing with these, I've been keeping my stop losses at um, 1.5 of the credit received and letting them play out that way. Yes, 50%. That is correct. But I'm waiting 1 second for hopping into this. I have not hopped into it yet, as I am waiting to see if we're going to start pulling back here. And we could also look at the ES because we're stalling right here for a second. So we give it one more, see if it does one more little retap down here before hopping in. And once I do get in, I will send out the alert to all you guys out there. But yes, I do look to collect 50% of the credit received. Why? Because that is the quick win. I've noticed I can, while doing these about this wide, I can grab 50% in about an hour, hour and a half, depending on obviously what's going on in the market, implied volatility, so on and so forth. But that is what I have found to be the quick trade, right? You come in, get your money, and then be done with it. All right, we're starting to get dots. Look like we're starting to rotate here on the ES. Now, at this point, the question all we have to do is ask ourselves, do we accept the risk? All right, so let's see what Interactive Brokers is telling me this is going for. It says 130 at the moment. All right, I want to see if I can get it for 135. All right, I'll get this order set up for y'all. All right, so two open, and I do have it right there if you wish to try hopping in. I do have an order out trying to get filled at 135. This is a 0 DTE SPX Iron Condor, and this is a bullish skewed icy thing that VWAP. Oh, then don't take it, Ryan. I think you're viewing risk reward a little bit differently. All right, well, I'm going to just adjust this order. What's it going for right now? Trying to get it for 130 now, just to see if I get a fill. So far, no fill. No, I haven't. I got filled yet. So everyone is aware of why and what is happening. Is VWAP came? We came down to ES, right? We came down to VWAP. We're holding. We're trying to rotate back higher. So we're just anticipating that the buyers are still in control and pricing go sideways to up. I'm actually looking at or adjusting this a little bit more to simply bring this a little higher if that is going to remain in control. And we'll see if we go for 150, if we bring it up to 150. So 4150, that's basically betting that the gap is going to hold and not be filled. You got in for 130. I still have mine out for 130. Did not didn't even touch it. All right, I got in for 125. Good enough for me. All right. So, like I said, all right. Two open, 0 days expiration on Condor, bullish skews, and the VWAP will hold as support, and price will move sideways to up. Okay. Now we'll talk about saw the concern, better risk reward. All right. So the way I view this is a little bit differently. So this is actually down at 45. This is 35. All right. So you're saying risk reward is not worth it. In my opinion, if you're looking at max loss versus max reward, yeah, that is not a good risk reward factor. That is why you have levels of acknowledging where you are right and where you are wrong. So for me, the way I look at this is like this. I'm stretching this out, trying to make it a little bit easier to see here. I'll go here. I'll set my slices to break even. Oops, wrong date. If you didn't know you could do this, you hit your slices right here. go here, break even, and then you should be able to do tomorrow. Should pop up there. Bam. All right. Now I'm going to go over to my SPX chart real quick. To the PCS, nice. Nothing wrong with that idea as well. Okay, so I'm going to go here and remove this. If you did not know, you could do this. You can go over to here and you hit set slices to charts. Then you hit this button. Now bring up your break evens on the time frame you have on your chart. So right here, this is basically saying support is going to hold and that we don't completely blast out and take out this high. Now, if price does wish to come back and test this little high spot right here, that's gonna be okay. That's we accepted the risk, and just looking for price to stay in this range at least until the end of the day. Now we're talking about risk reward. Where am I wrong? I am okay with admitting I am wrong. If price comes all the way down and we start to be in the money, or here I'll even do break even right here. All right, so the break even point is I'm risking 260 bucks. And on the upside end, it's roughly 260 bucks. And right now, all I'm doing is waiting for this to burn. This data is just burning. And if you're going to get 50% of it, so in my also opinion as well, is if you're going to trade options, in my opinion, I think it's better to skew them to have higher probability. If you're very focused on risk reward, in my opinion, then trade straight shares, buy some futures contracts, get that good risk reward. But in my opinion, trading options, since you can, skew them to where they could benefit you to where you have a higher probability. Okay, well, how? Okay, so this taking 50% off part always like throws people for a loop. So I'll challenge you to this for those of you that do wish to do it. Hold it till expiration to see if you grab all of it. More often than not, if you can grab the 50% and be done and take your money and be done. If you wish to hold it for the whole time, you can do that. But at the same time, there's a chance your winner can turn into a loser. And that's not what we want to do. The goal here, like this, like the trade, right? We always have to consider like what's the trade? We're thinking price is going to continue up to the upside while we are still making our position theta positive, right? That's the trade. Now, if it does come down, say price, okay, it doesn't hold, it starts crashing down. Okay, we're wrong on the trade. We'll take the loss. We need to have, if you want to trade options, in my opinion, you need to have a high, you position yourself in a high, consistently type of trade, in my opinion. It's in all time frames, in my opinion. Yeah, or you'll have to babysit the position, right? I mean, I'm okay with grabbing the quick 50% and being done, and it'll just melt away. And actually, I'll throw it up in this other account I have too. But that's how I view things. I take the high probability trade, place a high probability position, and the trade off of consistency is a skewed risk reward. That's the trade off. That's just the way trading works. 41.95, 42.05, 41.45. Bam. All right, I did hear some dinging. I will hop in that in 1 second. Okay, sweet. All right, just got to fill in my other account. All right, so now, do I roll the trade? No. So the way I look at this is really if I am already placing the bet that price that basically that the gap fill at a minimum is going to hold, right? You got to remember. So we're expecting the gap fill to hold. So this is down here on our lower end. And actually here, we'll put break even on here. That way we can see it in the context of large time frame. So upper break even is 41.96.24. Click that. 41.96.24. Okay, and then lower break even, 41.43.77. Bam. All right. So our break even is right outside the expected move of the day. The gap fill is right here at 41.50, and we can expect that price to hold as well. Now, if price just going to say that was it, gap, and then it's going to crash and take all this out, then I'll take the loss. But the moment is we have several layers of basically support below us to look for this to just ebb and flow. Yeah, go through over here. Going through the questions real quick. But yes, 50% I think is available. It's consistent, I think, in all time frames, in my opinion. All right, now to exit your order, you just place a closing order at 50%. So let's go ahead and get that set up here. All right, so whatever you got filled, I ended up jumping in and taking the 125. Your target is basically just we'll call it 60 cents. So you're going to come on over here. I'm gonna go ahead and get you all the order. Create opposite order. 60 cents, and it's just a limit order. So whenever that price gets there, then you can get filled. So stop order, you will have to watch it. You can't exactly put a stop. I guess you could do a conditional order on Thinkorswim if that's what you're trading with. But if you want to just have your profit target out there to be filled, here's the closing order. And I will alert if and when I am filled, win, loss, draw, whatever it may be, I will alert it. So closing order, this is the order to lock in 50% of the credit received. I will alert when filled. And I'll just put through DTE SPX. I see. So y'all are aware of which one trade this is. There it is. And it's just a limit order to lock in 50% of what you got. And this is half of the 125. And I just put 160. All right, cool. There it is. That. Now let me make sure I'm not missing any questions. So as of right now, it's just working. So the put side is what's taking heat at the moment, right? So if you ever need to know exactly what are your probabilities of success as it's going down towards your other strike. So we're short the 41.45 puts, right? So as of right now, probability of out of the money is sitting at 73%. So we're still sitting looking okay. And if it does decide to do a gap fill, it'll test the gap, potentially bounce, and by that time, plenty of data has already been sucked out of it to where you can lock it up. So why is it 50? Why is it a 50% chance of success? Can you tell me that? I don't understand how that's only 50% chance of success is getting right at it and going directional. That's 50%. Right now, we basically encompass an entire range of where we expect price to potentially go or not go, really, is how we looked at it. So how's it tell me how that is, JJ? Great trade 007. Nicely done. Yeah, I'd say about 10:30, David. And Basha, that is a you sell the order to get into position and you buy to close it. Okay, and JJ, and we're also using technical analysis as well with the setup as well. Nice, Dennis. And yes, Mike, it is the options open house. Welcome. We're gonna go for the gap fill. All right, we'll see if it sticks. So the gap is right here. Yeah, yes, Judy, I am stopping out. If it starts to, if your short strikes become in the money, you can go ahead and look to get out of it. How do I play my IC when it's losing, like it's happening right now? I'm holding on to it. Like, why do you feel you need to get out of it? Like the setup is we're expecting price to stay within a range, right? It's still within the range. The stop loss amount is whatever that it's going for at the market time, Judy. It depends what it's currently doing. If you put a, because like the IV or theta and all that stuff is going to fluctuate, then if you do that, then it will, it's going to fluctuate basically. So it really just depends on what you're looking at. Now you could do 3 times the credit received if you want, but for this trade, if you consider 3 times the credit received, like let's look at this real quick. Right. All right. So we got 125, right? Or I did. We'll just say 125. So 3 times the credit of that being received, that stop will put us up at 375. So a loss of 375. That's all the way outside the sold strike. So that's why I'm okay with adjusting it to not being 3 times the credit received, because in the end, once it gets outside this level, the more times that it goes out there. Where did my little pin go? Did I close it? Oh, there it is. All right. So the more time that passes as it comes this way, the steeper the loss, right? So that's why I'm okay with waiting at least to see when break even is tested. If break even is tested, which is right at the gap fill, if we do the gap fill, we'll test it, then potentially bounce back up. And if not, then we'll just take the loss, right? So was it just filled? Let's see. Houston, we have touchdown. Boom. All right. Gap tested. All right. So now, moment of truth. Does it bounce? Does it not? We will see. Got out your last one? Awesome. Yes, break even, Judy. Yes, that is correct. All right, and so we're also hitting the 15-minute AEMA. So we'll just see if it holds. And then in the perfect world, this will hold. Then price will just mosey on back up towards this little area. And then if it does, around 10:30 or so, we'll get out here. But you got to remember yesterday, too, price went all the way down and then ripped back up. And then also did it a few days. So just letting it ebb and flow. You're welcome. Great trade, Dennis. Eternal, right, Alex? Going to the questions. Profits Reaper. But yeah, I like the handle there. Boom. All right. Tested it, and now we see what holds. That's pretty much all I do for the day. Right now, out of the gates, sure, taking heat. Sometimes you do, sometimes you don't. I personally, obviously, don't do the whole gap fill concern because I've seen lots of gaps and never been touched. That's why I looked for the VWAP for area, though we did break it. But that's also why we have our areas of support and resistance and where we look for things to be um, held, really. So, like, whenever we got in right here, we did have our entries to go rotate higher. If we've got purely directional, yes, I believe we would have had to stop out of it. But since we have a area we're expecting price to be, we're okay with just letting it work. Now, if it continues crashing, oh, I am going to say crashing. It's not even really crashing. But if price continues lower, penetrates our areas, then yes, obviously we'll take the L. No, I do not let the gaps affect my and the reason I don't let it bother me is because, like I mentioned, I'm looking at who is in control at the moment. So let's reverse this thought. This is what I always do. Whenever so we got in at an area where we're looking for price to stay, right? Okay. So now we got in there. Price took heat. People's emotions kick in. They're like, "Oh my god, I now have a losing trade." Okay. But if price would have held and moved higher, how would you feel about that gap? Would it still have bothered you, or would you still be worrying about it? You'd feel nothing because everyone would be like, "Oh, this trade is working. I have nothing to freak out about because of this gap below me." But since there was heat happening right at the moment of entry, everyone's like, "Oh my god, the gap." It's like the gap wasn't there when it's working, but now that it's not working, the gap is there. So always think on the other side. And the number one thing I could always say to consider when taking your trades is accept the risk. Position size that you're willing to go to zero and let it ride. Because if you don't accept that risk, you're always going to be, we'll say, squirrely. And then just play the probabilities and however you wish to trade, whatever makes sense to you. Like I've demonstrated here, I like to do these high probability options positions on a high probability trade and then let the math work out. Got in at 240. Nice. You're welcome, Wayne. Hopefully I helped out some. But nice trade. So you said nothing's wrong with that. You waited for the gap fill, cool. Me personally, sometimes the gap fill doesn't happen. How do you calculate probability of it working out? Well, it's come down, test the gap, and we're starting to rotate up at least a little bit. I say the probability is there. If you're wanting like a number, all you could do is really, if you want a number, the easiest place to go is look at the options chain. So right here, right now, 41, 45, we're sitting at 68% probability that it'll expire out of the money. And then the upside is obviously quite a bit different as it has moved lower. So 41.95. So probability up here is, as of right now, it's pretty much 100% that won't happen. So as a rally, so I'll basically say 68% at the moment, JJ, if you really need to calculate it. But I do have a question for you. So if you calculate it, what is your I guess how would that affect your decision making? I'm only asking because I get this question quite a bit. It's like probably how do you calculate this? How do you calculate that? And sometimes I personally believe too much information can cloud your decision making. And if you did get the information, like how would it affect your trade? Like what would you do with the information? Dang, two losses year to date. Awesome. Well done, Andrew. The point is about risk reward. About 70% chance of success. Then you don't want to wish so much. So me personally, I accept the risk, and my risk amount is always the same. I don't hit it harder whenever I think, oh, this is going to work out more. That's just personally how I do it, and that's simply because whenever it because and I guess the way I view the market is if it's a world of where nothing is certain, right? You can only use whatever indicators you're using, whatever type of analysis you're using, but sometimes there's always a random chance of loss, right? Or unforeseen event type of thing. And whenever that happens, um, for me personally, I want my winners to take out those losers in the sense of things being unforeseen. So my risk is always the same. I don't think, oh, this one's more, so I'm going to hit it harder. Hopefully that makes sense. Probably not. Nice, Nate. Yep, exactly. Trade secret. So we're holding here, just letting it work. And this is a very how can I explain it? I would say this is my version of like drama-free trading, but some of y'all are feeling very dramatic, or and so with that, so you set the one trade and I let it work. I let the probabilities play out, and I have an area where I'm willing to accept I'm right, an area willing to accept I was wrong. Like I was wrong yesterday. Like we did one looking for price to go sideways to down based off the squeezes, but holy guacamole, 1 o'clock struck and we went pew and ended up taking a loss. Um, I wish I was there to buy some features for that move, but hey. What's going on, Beat Navy? How you doing, man? And we'll do the questions here, Andrew. So you don't take one every day to be fair, but 2 to 3 weeks. No, that's great though. You have a solid whatever you're doing, Andrew. You only had 2 losses year to date doing this. I think that is great. Congrats, man. Keep it up. Even if you're not doing it every day, that's awesome. What's going on, Nate? Sorry to hear about your health. Hopefully you're feeling better. You used the same strategy last year and it paid out 50% profits 85% of the time. End of year, you're up to 2,000%. Awesome. Congrats. That is great to hear. Anthony, yeah, I stopped doing the Planet Attack videos, and the reason I stopped doing that, so I've done I provided that stuff out there for free on YouTube quite a bit. And now there's individuals that come and hang out with me in the small account master where every morning we do the plan of attack basically live. So I've done it. I've shown I in my how I view the assessment or how I analyze the markets. If people wish to come do it with me more, they know where I'm at there. And if not, then um, that's kind of like why I quit putting it on there because those people are paying to be with me, and so I give them my attention. And to be honest, it was quite difficult and quite a juggle to get those um, videos done before getting my kids to school. So therefore, I just never really. Once I did it for a little bit, then now I'm like, okay, now I'll just do it when I come and do it live with them every morning. Yeah, that was really it. It's just because it was just a lot of doing it, or a juggle between getting kids to school and not to school. Strikes and gutters. Right. See, let's shine. All right, Kyrie, I believe you were just correct or fixed there. Going through the questions real quick, make sure I'm not missing anything. No free lunch, absolutely. Oh, thanks, Jeremy. And Andrew, see, you've taken my work, built on it, and made it your own. Awesome. That's the thing. There is you gotta you gotta take trading and make it your own, right? Me personally, like I love watching JC trade the way he does things and things like that. But personally, like I can't trade his way. I don't do that. And so I take what little tidbits I have learned from him, actually from using the squeeze and a lot of things where he talks about probabilities and things like that has really resonated with me. So I take those thought processes and have them uh, and apply it to my trading. But the key thing to trading is everyone has their own trading personality, right? Not everyone likes to hear it, but it's really true. Everyone is going to have to develop themselves as a trader. And then the hardest part, in my opinion, to trading is finding what trading strategy and works best for you. And what I mean by that is really because like there's theoretically every trading strategy out there works, right? Theoretically. The question is, are you applying it to the right market? Are you applying it to are you applying it to the right market? Are you utilizing it correctly? And are you also that does it meet your expectations as far as trading goes? Like if you want to hit those big trades where you don't win as much, you obviously have to do like some really big options plays where you're really big position size and you let it work, or are you looking for more consistency? Like me, I'm okay with coming in, grabbing my money, and being done. High probability trade. This the flip side of that is obviously you're going to have to risk more than what you're going to make. Yes, Luke. Her day. Having a hard time figuring out what fits your style. So something we started doing in the small account mastery is so it's changing into more of a mentorship. So what has changed in there is I have provided a lot of documents as far as how to create your own trading plan, right? I have outlines like from personal assessment to what a trading plan, what it should have. Like I and admittedly so, even being on this side of simpler, like a simpler is really great at, at providing strategies, but what's the plan for that strategy? And so I'm wanting to connect the dots there, or connect the dots between strategy and trading plan, and that's what we're doing in there now. And yes, Luke, that's where I'm at. I'm helping individuals develop their trading plan, and then it hasn't happened yet. But once you develop your trading plan and you do several trades, like you have to trade your trading plan. We'll do like a lottery, and the lottery is well, if you wish to participate and you hit the requirements as far as like at least having maybe 25 to 50 trades done in your trading plan that you have come up with, and you journaled it and everything like that, and we'll do a lottery, and the winner will get to have JC and myself evaluate their trades, their trading plans, and see how it if it fits their needs to help people develop their style. Because that's the biggest thing. I think a lot of people need to develop their style, and so that is that's the plan there. Or that's what we're doing there. Helping. I want to. I don't want to give you a strategy. I want to help you turn into you, as they say. So yeah, that's where we're at. I believe we have trials in there too. Come hang out, come check it out. I have all the documents in there for everyone developing themselves. As Poe the Kung Fu Panda said, I don't want to turn you into me. I want to turn you into you. And a lot of people don't like that, but that's honestly how it has to be. You're gonna have to learn to make your own way. And I just want to shorten that learning curve for you to turn into you. Because some people clearly like this IC idea, and then some people don't like it. And like JJ, he's not a fan. But it's okay though. That is okay. Not everyone has to like the same thing. What matters is what's working for you. It's in the small account mastery. Yeah. Teach a man to fish. Like Dennis, he went fishing this morning. Caught himself a good little short. Congrats, my man. All while taking pictures. I understand, JJ. So for me, when it comes to these, like I mentioned, risk reward is based off of the levels. So we have tested the gap. The question here: are we going to hold or are we not? That is the question. We could actually take a look at internals too. Let's take a look here. So we did get a little flush. Ticks are starting to go up. Advanced decline is moving up after that little flush. Currently, hold on, we need a clear, basically 41.55 in order for it to continue. If not, it may drop again and then potentially stop us out, but we'll have to wait and see from there. All right, choppy so far. Coulda, woulda, the coulda, woulda, shoulda game will kill your trading psychology. Unfortunately, it's always easier in hindsight. Like in hindsight, like, oh yeah, I should have just held on for this, grabbed here, yeah, moved up. But the problem is we didn't really know this was going to happen. Oh yeah, nothing against. Oh yeah, no hard feelings on the JJ. I agree there, Beat Navy. Everyone has their own little learning methods, if you will. But as of right now, as we're right here at the gap fill location, we are getting dots and arrows on the lower time frames. So we do need to see, but if we can get this little bit of a break right here, then I think we'll be okay as we're consolidating up here. But yeah, that's how I analyze the risk reward in there. Did that make sense as far as I'll leave it, I have 6 minutes left before Allison comes on. Did that make sense as far as how to do your risk reward based on the risk profile? That's how I analyze my risk on these trades. Does that make sense? And I show the profit and loss by option as of now. Like, what do you mean, Craig? As of right now, it says I'm sitting at basically a 67% loss as that price has moved lower. And that's based on the credit received. Yes, it's losing. Yeah, it's losing because we got in up here. The position does show a loss because we got up right here, or not, probably even higher. We got in up here, and this occurred. Well, looks like we may actually end up stopping out too while we're here. Brett Streamer. Oh yeah, I'm familiar with Brett as well. Absolutely. Rating the thing real quick. All right, cool. All right, so see what happens here. As of right now, our short strike is about to be tested. So we may be taking the L here. See what happens. And of course, why not? Remember, I expect to move is down to 41.46. So we'll see. And as I get off of here, remember, if at any point you feel uncomfortable, you don't need me to give you permission to get out of the position. Or at the 2-hour L2, good to know, Ricardo. Typically, the market does bounce pretty well there. But you don't need me to tell you when to get out if you start to feel at ease, if you will. But we are certainly creeping lower. Looks like the play today would have been just shorting the open. Anyway, Judy and how y'all are saying. Volume's good for you. Cool. Maybe Jill. You could, but if you're buying more than selling, then that is typically where you're kind of making it more. The probabilities aren't quite there, right? Because if you're buying, then you do need that move to happen. But if you're selling it, even if it's low VIX on an intraday basis, in my opinion, I think it's still okay. And this really all goes back to those guys I traded with at the firm, where it was back when SPX only had Monday, Wednesdays, and Fridays. Like I was out here trying to play squeezes on Tesla to the moon and all kinds of stuff. And they did the same thing every day. And the VIX was low. It was like 13. And they would just go ahead and they would put on they would wait 15 minutes after the open, see market direction, and just put on like a Delta 5 50 wide credit spread every day. That's all they did, even when the VIX was low. and uh, and they were killing it. And I only mention that is because that's whenever the VIX was low. Like I said, like 13. Oh, well, I have 2 minutes left. Any last minute questions there? They did credits, GRW and ICs. They did both. No, you're welcome. But that's how they did, and they just put their stop loss at 3 times the credit received, and that's how they worked it every single day. Weren't exciting. They didn't care, but that's what they did, and it worked. Why would you hate to admit that, Beat Navy? Why is that a bad thing to admit? No, they did it. They did it both sides. They waited 15 minutes and looked for. They just picked market direction and then played the probabilities. That's all they did. Delta 5, 50 wide, stop loss at 3 times the credit received, and they looked to gather 80% of the credit. They would set their orders and walk away. That's all they did, over and over, and they were killing it. Yeah, Delta fives. Yeah. Oh, that is my time. I do need to get out of the way, but if price does indeed keep coming lower, keep an eye out for that alert. We may be stopping out here probably in like 2 minutes. But that's the plan there. Everyone have a good day. Thank you for hanging out with me today, and I'll get out of the way for Allison. Have a good one, everyone.